AS11 deals with AS11 deals with accounting for the effects of changes in foreign exchange rates. Accounting for the effects of changes in foreign exchange rates. What is this accounting standard AS11? Accounting for the effect of changes in foreign exchange rates. Foreign exchange rates. It's all about business actually. So in old days we used to do business mostly within the country, within the same country. So the currency which we use for the business purpose is only one currency, that is Indian rupee. We used to do if the business is happening within the same territory, that is within India. Okay, that is maybe in olden days or long back it is got updated and the business is open for the worldwide. Okay, after this LPG liberalization, privatization, globalization concept, so the world any country can do business with any other countries. Correct? That is its present scenario, general scenario. So if you want to do business, if you want to do export, we can do export. If you want to import, we can import. Correct or not? Correct. So the point is, if I do transaction with any other country, if I do transaction with any other country, should I use only rupee for all the countries, whatever whether if I purchase from America or whether if I purchase from London, should I use only Indian rupees or I will use any other currency? That is my question. I will use only Indian rupees. Globally, only one currency I have. I will give this currency. All the countries it is accepted. That is, it is like that or it is different? Tell me. Yes, we will use only one currency across the global. No other currency we will use. Only Indian currency. I'm just asking a question. Please put your thoughts. We do only one currency transaction, sir. America means I'll go to America. If I'm visiting America, I'll get my 500 rupees note and I'll give it to them for any purchases. If I want, I can do that. Is it acceptable or not acceptable? Just tell me your views. Just share your views. Why so? No one is messaging. Every country has its own currency from Darshini. What about others? Yes, of course. Every country has its own currency. So that is what the need of AS11 arises. That is what the need of AS11 arises. For example, I will show you the example. For example, so we are discussing AS11. So as I said, for example, X is purchasing for rupees 10,000 from Y. X is in Chennai and Y is in Delhi. X is purchasing for rupees 10,000 from Y, and after 3 months, X will repay Y. Okay, this is the scenario. Now tell me, after 3 months X how much will pay to Y as per you? After 3 months X will pay to Y how much? As per the question, if you read the question, X will pay to Y how much? After 3, X is purchased 10,000 rupees of worth of goods from Y, and X is agreed that I will pay this 10,000 after 3 months. So how much the X will pay to Y after 3 months? 10,000 from Preeti. What about others? Same country transaction, same amount will be paid from Pravina. What about others? 10,000 from Darshini. 10,000 from Darshini. What about others? After 3 months, how much will payable by X to Y? 10,000 from Kavita. What about others? What about others? For the value of goods. For the value of goods only, 10,000 rupees I purchased. After 3 months, I agreed to pay 10,000. After 3 months, how much I will pay? That is my question. 10,000 only I will pay. After 3 months, how much I will pay? 10,000 only. Because 10,000 rupees only I purchased. I am in Chennai. My supplier is in Delhi. After 3 months, I agreed I am repaying 10,000, and I repaid 10,000. So transaction is over. Transaction is over. Another scenario. X is in Chennai. Okay? Purchasing goods worth of $10,000 from Y is in USA, and X is agreeing to Y after 3 months he will repay. After 3 months X will repay to Y. Okay? In this case tell me after 3 months X how much will pay to Y? After 3 months X how much will pay to Y? In this case, tell me how much will be paid by X to Y. $10,000 purchases is happening. After 3 months, X is agreed to repay to Y. After 3 months, from Pravina, current value of dollar at the day when repaid. What about others? What about others? What about others? X will pay exchange rate on this particular day from Swati. Depends upon the rate of currency from Preeti. What about others? $10,000. Good. $10,000 only they will repay. That is one answer, correct answer. What about others? But I am in India. Whether I will book whether I will maintain books of accounts in dollar or currency? I will maintain books of accounts in currency only if I am in India. Depends on the exchange rate on the date of payment by Parabhushan. What about others? What about others? I am in India. I will maintain my books in currency only, not in dollars. Correct? Say for example, we'll record in rupees. Yes. So say I will explain. So $10,000 purchased from Y on day 1. Okay? On that date the rate is assume 78 rupees. 78 rupees is what? 78 rupees per dollar. Which means while I am purchasing the rate of the dollar is 78 rupees, which means 10,000 into 78 rupees is my actual purchase. That is nothing but 7,80,000 is my purchases. On day one, I am asking. This is for day one. After 3 months, what happens? X has to repay. X will repay Y for how much? $10,000. On after 3 months, what happens? The dollar rate is 80 rupees. The dollar rate is 80 rupees per dollar. So $10,000 only I am going to repay. But on that date, the dollar rate is becomes 80 rupees. So if I want to get it $1, now I have to spend 80 rupees. So $10,000 if I want, I have to spend 80 rupees. So 10,000 into 80, 10,000 into 80 equal to 8 lakh rupees I have to spend it. Though initially I made a purchases for 7 lakh 80, but actually I am paying the vendor 8 lakhs. Even though he is getting $10,000 only, even though I am purchasing for $10,000 only, due to exchange rate difference, while purchasing it is 78, but while paying it becomes 80. Due to exchange rate difference, I am paying extra 20,000 rupees. I am paying extra 20,000 rupees, but actually I am paying $10,000 only to my Y. But I am incurring extra 20,000 rupees because exchange rate will differ. Exchange rate is volatile in nature. It is not fixed. So now this AS11 deals with how to account this extra 20,000 rupees. That is called exchange differences. This is 20,000 rupees is nothing but exchange difference. How to account this exchange differences deals by AS11. Okay? How to account, sir? What is the accounting treatment? This is all about AS11. This is all about AS11. Accounting treatment for various reasons. One of the reason is this type of dealing, business transaction. Okay? Understood up to this? Understood? Any doubts up to this? Any doubts up to this? Kavita, yes. Pravina, yes. Darshini, clear. What? Okay. I'll proceed further. So this is what all about AS11. In case of exchange difference, how to account in the books of accounts. I am in India, I am maintaining my books. How to account that particular deal in my books of accounts. How to account that exchange difference in my books of accounts. That is what all about AS11. Okay. So the thing is, AS11 is for accounting exchange differences accounting exchange differences, and this topic is majorly applicable to, this topic is categorized into 3 categories. This topic is categorized into 3 categories. Thing is, they are classifying this as Foreign currency transaction. Three types of category in this AS11. I will explain what it is. Foreign currency transactions. Another category is forward exchange contract. Forward exchange contract. Another category is translation of financial statements. Okay. First one is foreign currency transaction, not foreign category transaction. It is foreign currency transaction. Okay. So for AS11 there is three categories: examination point of view and our intermediate point of view. This foreign currency transaction is only tested in old syllabus. All the three is tested, but in the present syllabus, what you are studying is foreign currency transaction is tested, and the foreign exchange contract and translation of financial statement is not much tested. Okay, so we will focus on foreign currency transaction only. We will focus only foreign currency transaction. So under that foreign currency transaction, again it is further classified into initial recognition. What about initial recognition? The next thing is reporting at subsequent balance sheet. What about next? Recognition of exchange differences. Recognition of exchange differences. Okay, these three things only important for our examination. If you refer your institute material, this is what tested. So we will focus more on this one. But before this, we have to basically understand what is foreign currency transaction, what is forward exchange contract, and what is translation of financial statement. That we will understand. Then we will get into the topic. So what is this foreign currency transactions? What is this foreign currency transaction? Foreign currency transaction. What is all about? What is foreign currency transaction? Foreign currency transaction is nothing but general business transaction. It is not any specific or any unique transaction. Whatever you do in India, if you do with another country, then it becomes foreign currency business transaction. Then it becomes foreign currency business transactions. Okay? What is this business transaction? As per you, what is transaction? What are the things will happen in business transaction? What are the things might happen in business transaction? Business transaction means purchases, sales, sale of fixed assets, borrowings, repayment of borrowings, royalty payment, like this, anything related to business which is happening outside the country, that is foreign currency transaction. Why? Because while doing business, we are not going to use Indian currency. We are going to use another country currency. That is why it becomes foreign currency transaction. It is a business transaction, but it is happening outside India. It is happening with another country from India, and we are using another currency which is not an Indian rupee, that then it becomes foreign currency transactions. So this type of transaction, how to account? That is one category. Okay? Foreign currency transaction means it is a business transaction which is happening with another country. That may be anything. What is business transaction? Anything, purchase, sales, whatever it is, what is given in the material. You just go through. Material, anything is given for foreign currency transaction. I think nothing is given. Not an issue. But foreign currency transaction means buying, selling, borrowing, repayment of loan, royalty payment, sale of fixed assets, purchase of fixed assets. Okay? Like this only. Anything related to business. So one category is over. The another category is forward contract. Another category is forward exchange contract. Forward exchange contract. Any idea about services also? Not only purchase, sales, providing services also. Not only business transaction, it is not only buying, selling, service, providing services, receiving service, rendering services, technical know-how, royalty received, all these things. I'll go to the next category now. Forward exchange contract. What is this forward exchange contract? As per you, what is forward exchange contract? Any idea about forward exchange contract? Any idea about forward exchange contract? Any idea about forward exchange contract? Please, any idea about forward exchange contract? Any idea? Yes or no? Yes or no? Predetermined exchange rates. Good. What about others? No, sir. From PT. Forward exchange contract. So forward exchange contract means, I said now in the previous example, purchases 78 rupees. After 3 months, rate becomes 80 rupees. So I am paying extra 2 rupees. I am paying extra 2 rupees per dollar. So so because of this reason I am paying extra some amount, that is 20,000 rupees we arrived in that previous example, correct? So now I know that in future I will my currency, my particular dollar will get increased. My dollar will get appreciated definitely in future. So I want to avoid this foreign exchange loss. I want to avoid this foreign exchange loss, because after 3 months I don't know. It may go to 80, it may go to 82, or it may go to 84, it may go to 86 also. I don't know what will happen after 3 months now. So to avoid the forex loss, to avoid the exchange difference loss, I will put one contract with someone. I will put one contract with someone. What is the contract, sir? Contract like, see, whatever the price after 3 months, dollar rate, whatever the dollar rate, I will give you 79 rupees. You have to give me the dollars. In market, dollar rate may be 83, 84, 85. I don't bother. My rate is 79. I will decide. I will put a contract with today itself with you. You have to pay me you have to give me the dollar for 79 rupees. Presently, I purchased for 78, and I am ready to repay. And I am ready to repay to 79 rupees. Even though on that day, dollar rate may be 81, 82, 83, 80, 84, but I will pay only 79. Why? Because this is called forward exchange contract. Whatever the rate in future, I don't bother. This is my rate. I will pay this much only. So because of this, I am incurring only 1 rupees loss. So my loss is reduced. My loss is mitigated to some extent. Okay. This is forward exchange contract. For this, what is the accounting treatment? That we are not going to discuss much. We are going to discuss. But basically we are understanding what is forward exchange contract. That's it. We are not going to discuss much about accounting treatment and all. So next category. Next category is translation of financial statement. Translation of financial statement of foreign entities. What is this translation of financial statement of foreign entity? Say for example, Indian company having branch in UAE. Indian company having branch in UAE, branch in USA. But Indian company registered in India. Indian company registered in India, we have to prepare financial statement, presentation of financial statement. Presentation of financial statement in India. While preparing this presentation of financial statement, we have to incorporate all the figures. Sales means India how much, in UAE how much, in USA how much, purchases, India how much, UAE how much, USA how much. But branch in UAE and branch in USA, they will maintain in dollars. They will maintain in their home currency. They will maintain in the books of accounts. They will maintain in their home currency. But I am in India. I am going to present all the figures in India in rupees. I have to present this branch in USA and branch in UAE transaction, whatever the transaction they did, I have to present in Indian currency. Correct or not? Because I am the investor, I am the owner for that UAE branch, I am the owner for that branch in USA. Okay? I have to present my P&L account. I have to present my balance sheet, which is comprehensive. I have to incorporate all the figures. So while translation means from converting from foreign currency to Indian currency figure. We are converting from foreign currency to Indian currency figure. That is translation. So while doing this thing, AS11 you have to refer. While translating, for example, I made a purchases of USA branch made a sales. USA branch made a sales of $1 lakh. I have to incorporate this sales here. What amount I will put here? What amount I will put in my Indian P&L account? That is guided in guidance is given in AS11. That guidance is given in AS11. This is what translation of financial statement. Okay. So just for your understanding, you please go through all these things. But for us examination point of view, foreign currency transaction is important. Understood up to this? Up to this understood? and recognition of exchange difference. This is what we are going to understand. Okay. First thing is foreign currency transaction. What is a foreign currency transaction? Any transactions, any business transactions which is happening with another country, which is happening with another country. For example, I am purchasing from USA, that is a foreign currency transaction. I am selling to Dubai, that is a foreign currency transaction. Borrowing from London, that is a foreign currency transaction. So likewise, any purchase, sales, borrowings, repayment of loans, or any other activity which we do with another country comes under the foreign currency transaction. Basically, it is a business transaction happening in foreign currency because we are dealing with another country. So, in this transaction, in this type of transactions, what is the accounting treatment? How to recognize the particular transaction? Because we are using different rate. We are not accounting directly in Indian currency. We have to convert from foreign currency to Indian currency. While converting from foreign currency to Indian currency, what exchange rate we should use initially? That is what about initial recognition. That is what about initial recognition. Initial recognition means initially while doing some transaction, what exchange rate we should apply for that particular transaction. That is initial recognition. So all these things is there in the presentation. I will show you the presentation. So foreign currency transaction. I am just discussing the first part actually. Under that, the first part is foreign currency transaction. I gave you the meaning for that already. So under the foreign currency transactions, what are the subheading? What are the subheading we have gone through? First one is initial recognition. Initial recognition means I am doing some transaction. For example, I am purchasing or I am making sale, whatever it is. So I have to make an entry on that day itself because it is an accrual. We are following the accrual basis accounting treatment. So while purchasing from USA, what exchange rate we should use on that particular day? That is what about initial recognition. That is what about initial recognition. For example, if you see, today date is 16/10/2020. On this date, I am purchasing from USA, purchasing for $1 lakh. I'm in India and I am purchasing from USA. So the point is initial recognition means what rate, what exchange rate I should apply for this transaction because I'm purchasing in dollar. For example, I'm purchasing from X. Okay. So what I should do? What is the journal entry? Purchases account debit to X account credit. Initial journal entry. How much? $1 lakh. $1 lakh. But I'm in India, so I should account only in Indian rupees, not in foreign currency. I have to account only in Indian rupees. So how to account this $1 lakh? What exchange rate I should use? That is what initial recognition. What exchange rate I should use? So as per the AS 11, whatever the rate available on the transaction date. Whatever the rate available on the transaction date. Transaction date is what? Today is the transaction date. Today is transaction date 16/10/2020. What is today rate? Assume, I don't know exact rate. I'm just assuming that today rate is 80 rupees per dollar. Today rate is 80 rupees per dollar. So what I should do? How to account in my books of accounts? Purchases account debit to X account credit $1 lakh into 80 rupees. $1 lakh into 80 rupees equal to 80 lakh. 80 lakh. This is all about initial recognition. This is all about initial recognition. Initially, when recording the particular transaction, what exchange rate we have to apply for that particular transaction to arrive the Indian currency value. This is what initial recognition. The same is theoretically given here. Just go through the theory here. AS 11 prescribes that a foreign currency transaction must be accounted by applying the exchange rate between the reporting currency and the foreign currency at what date? At the date of transaction. Whatever the rate available on that particular date should be taken for accounting that transaction. Okay? Then the next step, reporting at subsequent balance sheet date. Reporting at subsequent balance sheet date. What is that reporting at subsequent balance sheet date? So reporting at subsequent balance sheet date, we will understand. I will explain what it is. But before that, just I am continuing the theory. For reporting at end of each accounting period, items in the balance sheets are required to be classified into monetary and non-monetary items. What is this monetary items? What is this non-monetary items? Any idea? What do you mean by monetary item? What do you mean by non-monetary item? Any idea? Monetary item versus non-monetary item. What do you mean by monetary item? What do you mean by non-monetary item? Share your views. Share your views. What do you mean by monetary item? What do you mean by non-monetary item? Monetary item means what? From Kavita, cash. Cash is a monetary item or non-monetary item? You mention monetary, non-monetary, you should mention. Cash means what? Whether it is a monetary or non-monetary. Likewise, please, all of you others, monetary from Kavita. Okay, good. What about others? What about others? All of you, please share your views. I need some more answers. Please share your views. Non-monetary means kind. From Bhupati, cash monetary and kind non-monetary. What about others? Water is monetary. What is that? Non-monetary means kind. Bottle is non-monetary. What about others? Monetary item means in value. What about others? What about others? So, monetary items, non-monetary item means cash items are monetary. Other than cash items are non-monetary. From Swati. What about others? From Darshini. Monetary items can be measured in fixed terms of money. Good. So, I agree with that actually. So what is monetary item means? Say for example, today I have cash worth of 1,000 rupees. In balance sheet I have today cash worth of 1,000 rupees. I am not using this 1,000 rupees for past 1 year. How much I will have after 1 year? Forget about inflation and all. Forget about inflation and all. Today I have 1,000 rupees in my in my hand, cash 1,000 rupees. After 1 year also I am not using anything. Same the 1,000 rupees I have. So what should what I should post in my books of accounts? What I should post in my books of accounts? 1,000 rupees or any other figure. Today I have 1,000 rupees in my hand. I am not using the 1,000 rupees for 1 year. After 1 year, how much I should post in my books of account? Same 1,000 only, because the value is fixed in nature. It will not change. Correct? Similarly, debtors. Someone has to give me 1 lakh rupees today, but for 1 year he did not pay anything. But for 1 year he did not pay anything. After 1 year also the debtors will be 1 lakh rupees only, because he has not paid anything, because the amount is fixed in nature. Similarly, creditors also. Creditors, loans also. Today I have to pay you 1 lakh rupees. I didn't pay anything for 1 year. After 1 year also I have to pay 1 lakh rupees. There is no inflation, there is no discount. Correct? So that is monetary. If the amount, the particular amount, the transaction is fixed in nature, the measurement is fixed in nature, the value is fixed in nature, then it is a monetary item. But non-monetary item, say for example inventory. Inventory is accounted how actually? Inventory is accounted how? As per AS to how we are accounting inventory? How we have to account the inventory? As per AS, as per AS to how we have to account inventory? As per AS to how we have to account the inventory? Share your views. Today my inventory worth is 1 lakh. After 1 year also the same 1 lakh I should account in my balance sheet or some other figure. Today my inventory from Bhupati, cost or market price, whichever is lower. Market price, cost price, whichever is low. Swati, correct. Today I have inventory worth of 1 lakh rupees, but I have to account as per AS2. As per AS2, whatever the value less, that only I have to account. So amount is not fixed in nature. It may change, because valuation is different. Valuation aspect is different. So because of this reason, the items are classified into two categories. One is monetary item, another one is non-monetary item. Monetary item means even after 1 year, 2 year, 3 year, 4 year, same amount will be reflected, because there is no change in the value. But in case of inventory, but in case of fixed assets also I can do revaluation. Revaluation or devaluation, whatever it is I can do, and I can increase or decrease the value. Investments, investment in shares, investment in debentures, that also I can increase or decrease, because as per AS 13, if there is a significant change, decline in the value of investment, I can reduce my investment value from the balance sheet. So if the value is changing in nature, or it might change, means then it is a non-monetary item. The value is fixed in nature means, fixed in terms means, it is a monetary item. Non-monetary change, value might change. Monetary item means amount is fixed, value is fixed. Why we are studying this one? That I will explain. Why we are studying this one, I will explain that. We will go to the next slide. Foreign currency transactions continued. Reporting at subsequent balance sheet date continued. Just to go through here, monetary item means what? Just to go through the language. And also non-monetary item means, what is non-monetary item? Just go through the theory. Just go through the theory.